ideate and then build the next generation of financial solutions for our clients. And today I'll demonstrate one of them, which really reflects our view that going forward a lot of value will be achieved by orchestrating across a value chain for a customer, and in this instance in the corporate treasury space, and a solution that we call Liquify. But first, I'll spend the next 10 minutes really working through why we chose to work on GCP, Google Cloud, give you some of the background around the business context and the customer demands, understand the strategic rationale for a solution like this, an orchestration solution, and then finally we'll demo the solution live, owing hopefully to Wi-Fi working well for us. So that's the solution, and that's a bit more about the company, as I just said. So we partner with GCP, and we are a proud partner of GCP at Synechron, first and foremost because our clients demand it. That's the fact of the matter. Our clients are tier 1 banks. They say, we want to use Google Cloud, you guys need to be upskilled in it. I think the key fact for a bank is they're all considering their multi-cloud strategies, and while doing so, thinking about the feature set of each of the different cloud platforms. And I think they're really starting to see GCP as that next-gen transaction handler for the future. The feature sets that really appeal to them are around data analytics, visualization, and native AI and IoT services. We also really wanted to use Apogee for their API aggregator, and Google owns Apogee. And finally, I think our clients really trust Google to not encroach upon their space in the long term. Now, moving towards the business and customer context of the solution we've created, corporate treasury functions for big multinational banks, they want low friction and they want low cost. And more that's challenged by a fragmented banking landscape where a corporate, a multi-cap national corporate, you might think of a Coca-Cola, let's say, will have about 40% of them will have over 150 bank accounts, and they'll be banked by over 20 banking partners globally. So how do you orchestrate a seamless experience and deliver automation when you're so fragmented in that way? And open APIs create an opportunity to loosen up the advantage that banks have, the stickiness that banks have, but at the same time deliver new multi-bank automation. So from a bank's perspective, the strategic goal here is to be the orchestrator, be the one creating that value. And there's two real ways, that there's two directional paths that that's taking right now. You'll have software as a service vendors on the left there, firms like Stripe that create or solve for a niche for customers that are underserved, and then more the aggregator type solutions like Finastra, FIS, and Fiserv that really pull together a whole ecosystem of different API-based solutions and modular components, and that allow for continuous innovation at clients. On the other side is probably the path that banks would prefer, which has historically been to try to be a global local bank. So you think of like Citi being in about 91 countries around the world, HSBC, Standard Chartered, those big global local banks. That model is very difficult to scale, particularly if you weren't a first mover in there, and more you're seeing the failures, the firms that are retreating back to home base after trying to be that global bank. I think Deutsche, FIC, RBS, and a few others. Going forward, what we expect the trend to be is for banks to try to be the hosts of other banks, who basically, within their corporate portal, host other banks' bank accounts and then deliver automation services on top of that, for example, like cash sweeping, something you do every day. And so that is key to the solution that we've built as an accelerator in our ecosystems program. Then if we just think around the big picture of what the solution, how this fits into an overall strategic issue for a bank, is more and more banks are losing the value add. They're becoming, you'll hear that story about trying to avoid being the dumb plumbing. Well, it's because of open banking APIs, particularly in the B2C space, like PSD2 in Europe. But banks are generally approaching APIs voluntarily these days. You have a scenario where firms are extracting the value out for the customer, they're owning the interface, and the banks are really just becoming that payments and bank account holder. So you see firms like those personal financial management apps, like an Acorn, solutions, for example, that's helping you save better. Stripe and Plaid are more in the middleware space, orchestrating multi-bank services. And then further, you see neobanks and challenger banks really trying to take on the core banking infrastructure. There's another approach to solving this as well, which we call network technologies, which is really trying to find a shared infrastructure across multiple banks to deliver interoperability in their processes. And Symphony and blockchain are probably two good examples of that movement. Lots of different bets that you can place. What's key though is banks are trying to be the ones that create the value for the customer, and but at the same time they can't really do it all. They can't be in all places at all times. They'll never be able to keep up with the pace of innovation more broadly in a room like this. So we'll get to the demo now, which is Liquify, and hopefully with the help of Simon I can jump across the screens to the demo. Very impressive. Did that remotely. Cool. So what we've built here is really just an accelerator for internal purposes. I won't do the full demo because the Wi-Fi probably won't permit. But the solution is an API-enabled solution to automate treasury and liquidity processes. And that's particularly the benefit we're trying to seek here is automate across geographies, across banks, and across departments. And we've already seen this with clients that we're working with around the world. And this is really trying to help the bank offer a treasury as a service solution, and either the bank would host this solution or the client would host it themselves, orchestrating across multiple bank accounts. And what we built is basically a whole bunch of multiple APIs being orchestrated within a microservices layer in the cloud, and then that is being pushed through an API gateway in Apogee, and then exposed through this interface. This interface is not so much the solution, the API is the solution. And what I guess the key to the technical architecture behind this is that we can sub in and sub out APIs. They are fungible, and we don't need to, it doesn't disrupt the wider platform architecture, so it scales well. And also it's channel independent, I should add as well, which is important for customers in the way they want to consume this type of content. So on the screen here you can see all of the multi-currency accounts that this dummy customer has and some recent transactions that they've placed. I think today when you need to do cash sweeps across all your bank accounts, you will manually extract it from 150 bank accounts, let's say, put it into a spreadsheet and apply some Excel rules or macros on top of that to tell you what trades to make. It's not real time, which means it's not optimal. That means you have a risk of payment failures because transactions might have happened after you extracted the data from the bank accounts, all the bank accounts that you have, and so you have a large operations burden. You might have like 5 FTE that exist to basically around the world do this process on a daily basis. What we'd like to be able to do it is in real time, 100 times a day if you want. So the client is going to be able, on this dashboard page, be able to see their transaction activity, their history, and the key is they're really trying to keep the balance of their portfolio within a range so that they can be optimal with regard to the interest rates that they're earning, but at the same time not fail any payments due. Further, we can see a history of transactions. Again, you know, APIs are obviously plugging directly into banks' internal accounting systems, and so we can see a history of transactions that we've made across each of these different bank accounts, and then we move to really the crux of the API is the ability to configure it. So here we have a view of all the different APIs that are connected to this solution, and your ability to configure the upper and lower thresholds of how much cash should be sitting in that account at any point in time. And so I can change that to anything I want. Further, I can change it. What's key here is we want to sweep it to a base account. And so historically, you could do this sweeping it into your own internal accounts. If you had 10 accounts at Citi, sweep it into one main account at Citi. But our solution allows you to sweep it into a rival bank where that corporate chooses to be their global group level sweeping account. So you might choose RBS, and you might choose a specific account within RBS. Then you will set frequency for how often you want to run this API orchestration effort to basically do a sweep. You might do it every hour, every 2 hours, and you can create as many rules as you want. And so this really helps us to be not a once-a-day process, but a continuous process, and we can do it across lots of different bank accounts as well. So that concludes sort of the gist of the demo. The solution is not so dynamic because it's based on time, as you can see. So if you want to wait for about 3.5 hours, you might see the next sweep occurring in the outputs of this rule that we've just created. So thank you very much for your time. And this is just one of the accelerators that Synechron's building that I think reflects the future direction of banking. Thank you. Yeah, and please ask any questions.